Good morning, traders, and happy Friday. It's 8 a.m. Chicago time, 9 a.m. Eastern. Thanks for joining me today for another Trader Bite. It is like Friday today. I would appreciate it if you would find the thumbs up button and click on it today. If you don't see it on your screen, click on the YouTube icon at the bottom right and go to the YouTube stream and click on it there. Again, I appreciate you doing that. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today we are bullish. We are pretty good bullish across the board. The only thing that's down right now, the only product that is down is the US dollar index on ICE. The US dollar is down 45.5 cents or negative 0.47%. The leader this morning is gold at $1,230.30, up $13 or 1%, a little over 1%. So I'm seeing an odd thing here. I'm seeing gold, the yen, the U.S. Treasury bond all at the top of the list, along with um, along with the treasuries. The Nasdaq is really pushing this morning. Nasdaq is up 27 points, up 0.47%, trading at 58.2450. It's way up there, folks. So it's we're looking at a gap higher again today. The overall news flow overnight, we did get some key earnings releases this morning from the banks. We got Citigroup announcing 128 versus 121, pretty strong. Revenue came in at 17.9 billion versus 17.3 billion estimated, so beat on both ends. JP Morgan beat by far. It came in at $1.82 versus $1.57 expected. Revenues at 26.4 billion versus 24.8 billion, so they had a really good quarter. Wells Fargo came in at $1.07 versus $1.02, 22.2 billion, missing the 22.3 billion expected. And then overnight we had some figures. It's actually this morning. The U.S. CPI month on month came in at 0%, missing the plus 0.1%, 10 basis points increase expected, showing inflation is weaker than expected. CPI ex food and energy month on month also came in weaker at 0.1% versus 0.2. And we also got advanced retail sales, which came in a fair amount worse, negative 0.2% versus plus 0.1%. This changes how the Fed funds rates, Fed funds futures trade, and therefore, they're changing they're repricing the risk of a rate increase. So a lot going on there. The other things that are likely driving us into this morning, the healthcare bill that was supposed to be released yesterday did not go through very well. Already 2 Republican senators came out against the bill. Other than that, the other stuff you can pick up yourself and find out what's what. I'm not going to go through the whole news cycle. This morning at 9:15 Eastern, so in about 10 minutes, we get industrial production for June expecting 0.3%. We get cap utilization also for June at 76.8. And then this morning at 10, we get University of Michigan confidence, the prelim. This is a mover. The prelim number is expected for July at 95.0. Again, I expect this to be a mover. Again, and then again at 10 a.m. Eastern, we get business inventories for May at 0.3%, and that pretty much wraps up our week in releases. We do get Fed Speaker Kaplan at 9:30 in about 25 minutes. He's speaking in Mexico City. He's a voter. Voter neutral stance. Okay, let's take a look at what we expected yesterday versus what we got. This is yesterday's primary hypothesis. We spent some time yesterday reviewing the prior day, as I wasn't didn't do a trader bite on Wednesday. But this is yesterday's what we expected pre-market for what was there during market hours. The primary hypothesis is for the market to open in an open auction, drop down to value low at 39. Um, in the 39 area from the prior day. Here's value low. It's a slightly gray. It's the gray area of the profile is value. And then I'm expecting a push up and then an impulse out of range, out of range into the 24.46 area. And then I expected the market to chop sideways once it gets to 46. Uh, I explained the reason yesterday, the reason being that we would be pushing into a template day where there's a fair amount of volume up here the last time we traded in this zone. So this was spot on. I'll show you what it looked like in a second. As far as the secondary hypothesis was to flow upwards, test, find the sellers, and then rotate down all the way through yesterday's range, but finish somewhere in the middle, build a 2-day balance profile from which I expected today or sometime early next week for us to break out of. Looks like the Nasdaq's already done that. So again, here's what we expected yesterday. Here's what we actually got. Again, the drop to 39 and then a push above the prior day's high. We had a weak high up to the 46 area. Here's what things looked like in fact. Here we are. So we tended to float up on the open. We had an open auction. We floated up on the open. It looked like hypo 2 is in play. Then the market dropped to 39 on the dot right here, the value low, this gray line right here. 39 on the dot. Nice setup for a mid short with a scale, and then it started to drift up. Once it reached the other side of the mid, which is this blue line, we're back to hypo 1. We pushed to 46.50. Remember, the 46 is a key area. We're expecting chop. Here's your chop, right on course. 46, and then it pushed to 47. It broke that weak high at 47 and then dipped back in. Notice that the point of control from yesterday is right on top of that high volume node left behind from, I believe it was June 26th. So let's go back in time here. Let's fix the scale. Go back in time to the last time we traded here. It's very important to use template days. Here's your template day right here, June 26th. And there's that high volume node. That's where I get that assessment from. So once we push through that 4050 area, notice the 4050, which was a triple top. Once we push through the 4050, the next area of interest is likely to be 46, expecting chop in this area. Once the market moves up here, I expect it to chop around, and that's exactly what we did yesterday. So the auction was very orderly, very methodical, and but again, the opportunities are not so great still. I mean, it's tradable, not incredibly easy to trade, simply because we're tending to have a tight range and hold steady in a range for a long time. So that's yesterday. Now, looking at what we've done, we've had, gap zone. So we have this gray area, this gap zone beneath us that's still open. And then what we need to do, because yesterday traded inside of the prior day, we look at the 2-day value. We call them a micro composite. This gives us an insight. Let's send this to the back. This gives us this profile here, combines 2 days worth of profiles, and this tells us where the market traded. Now, bar charts show us price. The volume profile shows us how much interest there was at each price. So it's kind of like, knowing direction is great, but knowing direction and velocity allows you to potentially project where the projectile is going to land for those who like physics. Sorry, I'm an engineer. So this is how I look at volume. It tells us, it emphasizes what it is we're doing at those prices, and overall we have a profile that is almost a double distribution profile, some pretty good volume in this area, and the market has built its upper distribution just like we had. So what we have here is basically what we had the 26th, and what's remaining is for us to push through to the all-time high, which is up here at 24.5150. So that's the next stop. We're not able to fill the gap below. Buyers are definitely in control, and we've been pushing on that CPI coming in weak. What that is likely to do is affect how the Fed changes rates going forward into the remainder of the year, and the market's taking that to be a positive outcome. So that's where we're looking for. That's where we're looking for this to continue higher. Now, the expectation for today. Now let's look at the overnight. Here's the overnight trade. Switch back to 15 minutes. The overnight trade, the volume is pretty much in line. Some pretty good participation overnight, especially for July. We spent just a lot of time down here inside of yesterday's auction before breaking higher at 7:30. You can see the break higher at 7:30, and the market has pushed to 24.49 and is coming off slightly now, and it's returning to the scene of the crime, basically, of that CPI news. I expect it to continue to drift lower down into 46 and a quarter this morning. So that's how things are shaping up right now. As far as what we've done for the week, it's really important to keep an eye on what we've done for the week. For the week, same stuff as yesterday. We've gapped up. We have a higher low. We have a higher high, and now the intermediate range, intermediate time frame players are back in control on the buy side. The 51 is very likely to be broken going forward into next week. So this is setting up bullish from here, despite the fact that we have a vacuum underneath us in the form of this gap zone. So what is our expectation for today? Expectation for today is to open on the edge or inside of the point of control. I'm expecting the market to drift up, find its sellers, push down into this 41 area, and then hold steady in here. I expect another thinner profile like that. I didn't draw that very well. I'm expecting a profile that is another one that is heavier on the top. See, remember yesterday I talked about how these profiles tend to be heavy on top. Okay, they're double. Some of them are double distribution profiles, but we tend to be heavy on the upside, just like yesterday. I expect that to continue. Buyers are in control. These are all P-shaped profiles. These are squeezing shorts mainly. So the primary hypothesis: open auction, drift up, find your sellers, drift down, and then stick in the middle. I expect about 7 or 8 points of range today on Hypo 1. Okay, so I expect us to push 24.50, find sellers just above there, rotate back down into yesterday's range, trade down to probably 24.45, 24.43, and then hold steady into the close. That's the primary hypothesis. Secondary hypothesis: if we do get sellers and we start to push lower, I expect a test at 24.40.50, consolidation, a break above mid, and then a push towards the overnight high for it to rest somewhere in this 24.46 range for the week. This is where I expect us to finish the week this week. Looking at the areas above us, we've already reached the range high for the week. You see it right there in the middle. We've achieved the range high with the gap up. So the week has kind of fulfilled its destiny as far as range. That doesn't mean it stops, but we do have some pretty decent targets above. We have these triple, the all-time high followed by two measured moves, right? Two separate measured moves, one above the other between the 24.5150 to the 24.5450 area. So I expect a fair amount of resistance if we start to push into there. But I am looking for it to squeeze up to 24.50 today, find some sellers, and rotate back down. That's what I'm expecting for today. I want to remind you again, it is like Friday. Please take a moment to hit the like button, and also because it's Friday, because it's summer trading, just make sure that you're not committing too much to any individual trade. Your goal as a trader is to take as many trades as you can so that your performance can get closer and closer and closer to its true edge. The only way to do that is to take as many trades as you can with as little risk as you can. And then over time, your edge will show up, and hopefully it's a positive one. Good luck. And again, happy Friday. Have some good trading today, and I'll catch you on Monday. Take care.